Let's start 207 as always. Let's wait for the computer to get ready for the recording. Okay. Welcome everyone one more time to the midweek seminar. It's been a very interesting first 2 days of the week. Getting back to the seminar that we did on Sunday, we told everyone to fade the open. Hope somebody did. I didn't. I was waiting for 139, 138 and high. So I missed the move. So nothing to feel bad about it. I missed me personally, I missed the big move. So that's the way it is sometimes. When you try to be too perfect, you end up sometimes missing some money. So we're going to start the seminar like always with the market correlations and everything that we always do. And a very interesting structure how it comes to the market, which is a possible bullish triangle in the S&P. Most of you guys know that if the S&P become bullish, risk is going to go bullish, and the dollar most likely is going to trade lower. That's a given. So as you guys know, that asset buyers, we're holding in a small time frame or mid time frame buyers, that what happening on the dollar is a B way. I spent almost 2 hours today trying to find a way to make the dollar bullish, and I gotta be more than honest to you guys. I can do it for the euro, but I cannot do it for the dollar. Don't ask me why, but well, that's how I feel it. Now, this is the S&P. S&P, and this is the daily, and what we have on the daily and the S&P from here to here is, this is a three-way move on the S&P. So another high, you can count like 1, 2, 3, 4, and 5. This is a closing, remember. When you see the extension, it's at the 1.618. When you see the retracement, he's holding around the 3802. So technically speaking, maybe the S&P is nesting to the downside. How do you see it? 1, 2, 1, and a flat 2, when one more high coming in, trusting for the triangle, and then lower in the famous, most popular crash that everyone is expecting. But well, the count is there. Otherwise, we need to move on to the idea that the S&P is going to break the 1350, the high, and continue like we have mentioned before in a double zigzag to the 1400 area. As simple as it can. Now, all depend of 1348, because another way to look at it is 1, 2, 3, 4, 5, and then you have A, B, C, W, S, but that level is going to put the S&P to minimum around 1340. In other words, it's going to test the high. It does another scenario. So technically speaking, triangles always are 10-minute move or B waves most of the times. So I think that as a waiver, you need to play with the idea that it's a 10-minute move and goes from there. And then for the people that trade S&P, the first five legs coming out of the triangle, you guys should fade it in order to get the crash. like people come. Now, on the 60-minute chart, let me contract a bit. This is how the structure looks. It looks like possible. A, if it's a bullish triangle. B, C, D, and then it looks like it's doing, like we've been saying, a B-way triangle there. So no matter what, it's going to trade lower to 9, and then from there should trade. So technically, the number is, this is the dollar, so you won't see the number right here. It's around 1220, 1230 area. It should bounce from there. Now, if the bullish triangle is in place, then we're going to see a lower dollar. That's as simple as that. If the case is A, and then A, B, C, right? We are on the D and E and lower, we're going to see a temporary higher dollar. The thing is that the B wave cannot be a triangle. I'm sorry, that wave 2 cannot be a triangle. So it's going to equate to around 1189, 1200, and then bounce back again. In other words, as it is right now, the S&P is calling for higher risk. Now, the only alternative that the bears have, in other words, the only alternative that the risk of or reservation have is as follows. It goes like A, B, Z, W, or A, B, C, W with a flat B in the middle, and then A, and then we're going to go on the B-way triangle. Is going to trade lower around here, and then from here, it's going to test higher to about this high, but it's going to respect this high, and then from there, it's going to trust, or it's going to go lower in the famous crash. So those are the two scenarios, or the three scenarios technically on the S&P 500. Now, let's get back to the daily. Let me take this. Let me put the euro for you guys. Okay, this is the euro on the daily. As you guys know, let me contract a bit. This is, one second. Okay, as you guys know, our preferred count is the top, and then A, and then A, B, C, right? And a contracted B-way triangle. Now, the euro, our preferred count is calling for A, B, C, D, E, and the low. Now, how you put that in top of the S&P is, if it's the bearish count, the S&P, then the euro is going to drop from here. If it's the temporary bullish count in the S&P, then you're going to have the C or E wave. Now, if is the count in the S&P when it's going to test the high, which is the triangle, instead of being wave 4, the triangle is the S wave, then S&P is going to test the higher 1400. Then, in that being the case, the euro can be doing the same count only that it can be ABC, I'm sorry, ABC, AB, and then it's gonna test around the 160, 152, 153 area, and it's gonna draw from there. Don't ask me why. Don't ask me why. I know the euro, they have a lot of issues, but don't ask me why. The same issues that they are now were the same issue that they went. I've been saying one more time, the same issue that when the euro was an 18. The rest, that's all BS. I don't trust in those fundamental things. Now, the market was more bearish euro in 2010 and 2008 than what it is right now. So when the market is so bearish, start buying it. That's the way I trade, and I always will. That's why you guys see that any kind of contrarian on the service. Now, the same was at one. We were the only one in the world when the market was at 131 saying that the market is going to bounce. Guess what? The bounce was there. And the market was as bearish euro. People were saying that the world was coming to the end. So I don't believe in that. So those are the three scenarios when you can see the S&P together with the euro. So in other words, everything depends of an S&P. In my book, everything depends of the S&P. Whatever the S&P is going to do, out of the three scenarios, you guys going to see what the euro is going to do. Now, if we put the S&P together with the euro, what I did here. And we go to the daily, we're going to see the correlation. Higher S&P, higher euro. Lower S&P, lower euro. The euro top in May the 4th, the euro bottom on October the 3rd. In my view, we are still correcting the move from May the 4th to October the 3rd. If we take a look at the euro index, the euro index sent a scenario. May the 4th, October the 3rd. What happened? It did 1, 2, 3, 4, 5. What it is? One more time. A in 5 ways. 1, 2, 3, 4, 5. Corrective. That's why you guys keep saying, you guys can see that I keep saying the same thing. That the euro can have a recovery. Now, I don't say that you have to bet your house in the euro recovering. I only say that's what I see Elliott Wave wise. Now, it can happen like this. This looks corrective. Nobody can deny that. That's corrective. And this is what I see on the euro. I mean, I don't want to play contrarian, but on the simple look at it, this is a 5-way swing, and this looks corrected against the 5. They're holding the low. If you take a feeble level here, you guys gonna see that the euro is holding between the 618 and the 764. That's not a bullish structure. It is in my view. If I was to trade this, I would buy here instead of sell. That's my view. Now, getting back to the risk assets, we're going to add now oil to the equation. Top on May the 4th, bottom on October the 3rd. Now, oil, it is very interesting. The whole world is dropping and dropping and dropping, and the whole risk trade, I'm sorry, is dropping, and oil keep going higher. which is amazing. Now, if we're going to leave only oil there, we can draw the conclusion that either you count this as a whole group, which is A, B, C, W, S, A, B, C, Y, when the two legs are completely equals, and then we are correcting this move now. Now, this is very spiky, very vertical to the upside, but it's only in 3 weeks. We have divergence in there. Now, another scenario is it goes 1 in regular 2, 3, 4, 5, like a type of 5-way swing. Now, nothing wrong with that count, and then it's correcting the whole move. That goes more with the S&P. And oil with the take of this level that comes around, what is the high here? Around 119 something, it's going to invalidate a possible 1, 2, 1, 2, and then 1 and the next 2. See divergence here, worry me a bit, a little here, but either way, this move is very exhausted, and that move can allow a little bit more to the upside, but that move goes pretty well with the idea that the S&P is in the most of the bearish count, which is in the wave 4, right? Now, when we get to the euro individual pairs, I'm going to show you guys that possibility. Now, in other words, you see the correlation in the whole market. And then now, it comes the part that I don't get it. To be honest with you guys, I want to be honest. I want to become a bullish dollar, but I challenge you guys, send me a bullish count on the dollar. That makes me happy. I see 1, 2, 1, 2 in a possible nest. Now, that this is the most beautiful part of the nest, I don't think so. I would be more than happy if it goes, instead of going this, it would have done 1, 2, 3, and then another 4 and another 5. The message is, you guys need to understand that the market can go both ways. Now, this is a textbook flag. People wanted to admit it. People do not want to admit it. Now, I don't want to be so bearish on the dollar, because you never know what's happening. There is avenue any place, but I would tend to agree, and I would tend to think that if you put me against the spot right now, out of the 3 counts that we're showing in the euro, out of the 3 counts that we're showing in the dollar, and out of the 2 counts that we're showing in the S&P, if you put, like Sad said, gun in my head, I would say that all those pairs, they're going for the test of this low, or these lows, minimum, in my view. What I'm trying to say that is this. I can count a bullish. It's like 1, 2, 1, 2, and then if you take a look at this part right here, that part looks very similar to the part right here. All right? So I'm suspecting that this is if I'm going to be bullish. 1, 2, 1, 2, and then 1, a flat 2, and then the dollar is going to do this, and bounce in the third nest to the outside. And that's going to go with the triangle thrust and the flat on the nest on the S&P. Possible. Don't disagree. That's going to be the preferred counts to prove me wrong. I can find a way in every pair with that count. Do you guys understand it? So, this is another one that had me scratching my head. Is the dollar cat. 1 second. You see the correlation between the two. Now, this is where it's interesting. Looking at the small time frame, like a 60-minute chart, if you take a look at the dollar, let me take the cat a little bit. Let me put the candles, I'm sorry. Some people calling this 1, 2, 3, 4 with an extended 5. I can take that. I can live with it. It's not my preferred way to laboring, but I can live with it. I can live with that idea. Now, if that's the case, then the dollar, and this is what I think, it did A, B, ABC, this is A, and then ABC in a flat B, and C. And I mean, in other words, A, and then a flat within the flat. And then, technically, this is A, B, and the dollar, then it's going to trade lower into a C wave. That's the most bullish that I can go, to be honest with you guys. Sorry, but that's the most bullish that I can go in the dollar index. I don't say it's not possible. Yes. All I say is the time to be selling the dollar is very close. And something that makes fun to me, I know Isa is going to laugh about it. When I play contrarian in favor of the dollar, everyone is happy. When I play contrarian against the dollar, everyone is like playing contrarian to me. But I don't trade based in, I trade based in this, that I've seen it enough to know that this is not a trap if it's a flat. That's the only way that that's not a flat, that that's not a trap. Otherwise, this RSI is a flat. I respect everyone's idea, but that's mine. And it's not easy see a pair rally, but I don't buy the dollar right here even if you put $1 million in my hand, because it doesn't look like. Now, let's take the dollar for a bit and put the cat. The thing is that you can count the dollar with an extended 5. But the cat did from the lows 1, 2, 3. So cat denied the bullish case for the dollar, in my opinion. I made a case that the extended 5 in the dollar is not there, the 9.6. Guys, follow me? So, very easy. 1, 2, 3, W, and S. This is the 50% retracement of the whole move, right there. And then it did in the regular basis, not in the closing. It did 1, 2, possible 3, 4, 5, or WSY in a lesser degree, 3 backs, and here is the big question. If this the whole seaway or it needs another high. You guys need to take in consideration that these two legs, they are almost equal right there to the high. So maybe the cat is done. But I don't have to go nowhere to see 1, 2, 3, 4, 5, 6, 7 swing in the cat, telling me that this whole move is correct and that this is a trap in the dollar. Maybe I'm wrong, guys. I'm sorry if I'm wrong. I give you my honest opinion. That's what I think. If you take in consideration this, look. One second. Exactly, my friend. Exactly. I mean, how many times you see me being a contrarian and being right? As Rajida is there, I always say that. I mean, that's the way I trade. I trade more. I'm a market correlation guy. I don't care about Europe. You can say anybody. I don't care if they go to the street. I've seen it before. I don't care about fundamental. I may be naive about it. Look at those two pairs. That's in an hour, right? Looking at the daily. Looking at the daily. Can you deny the idea that the first move in the dollar was a three-way move after you seeing that correlation? Look. It's not impossible, right? You see, Isaac, what I mean? Look, they are correlated like you trading the same pair right there. Look. I can go back into the biggest time frame, and they are very similar. Only here broke a little bit, but they're very correlated. Look, very correlated. Now, that's it for the market. It's the same. You know what I mean? You want to see the Norwegian? Yeah, I will do it for you with the dollar, right? I believe it's even a stronger correlation. You're going to see. Let me put the 60-minute chart of the Norwegian crown. And for the guys right there that are trying to land, that I know we have a lot of, yeah, I'm going to go there. From the guys right there that are wants to land, look at the correlation between the Norwegian and the dollar. It's even stronger correlation. Look at that. Even a stronger correlation. Now, I advise you guys, the one that wants to learn Elliott Wave and how to trade this market. Use market correlation. That's the key. Listen, if you put all these three together, let me take the euro out. 1 second. And this is how it works. And put the cat back. What happened? You're going to see that those three pairs, they are very correlated. Now, what you need to see also is the idea that out of the three pairs, which is a cat, a Norwegian, and even the US dollar index, look, this is the message. You got the three pairs correlated there. You go to the 60-minute chart. All right? The move technically start here. All right? Look. The green one is the cat. The purple one is Norwegian. The black one is the dollar. Let me open it now a little bit. What you have from the lows? You can call the dollar, like I say, with an extended 1, with an extended 5. You can call the purple one also with an extended, with a 5-way move. But then the cat denied the high in a 3-way move. What is telling you? That this move, that the first two, they're cheating. Because you question the idea of the 5-ways. That's the message that I want you guys to get. Look at that in the daily basis, all those three pairs, right? Now, let's move on to the dollar as an individual pairs. Again, on the dollar, on the individual pairs, you gotta label it like this. You have different scenario. You have it. Let's draw the conclusion that this is not a 5, that this is a 3. And then you have 3 ABC completed. And then, or maybe a marginal new high. Somebody asked me today, it was Dina, I believe, why the euro dropped at 34.30 was the low, right? The reason is because these 3 ways, guess what? They are equal, and not only that, besides they were equal, he stopped at the 618 of the previous leg. That's typical of a double zigzag. Let me see if I can get back here. It's not allowing me. Let me see if it gives me more data. That was the same case right here. You have a questionable move onto here, and then when you measure here, you're going to see. The first move comes to the 618. You see, it stopped right there. But the idea is that from here to here, I did a 3, and then I believe that these two, they were almost equal. I don't know. It looks to me like the same scenario when the euro was coming out of the 149.50 area. Now, right here, getting back to the small time frame on the dollar, this is how you should see it. Look at the RSI. Look, that's a 3-way move. That's divergency. That's a trap. Look at the angle that you have right here. When he's going to explode higher, I can prove to you guys how he does it. But you know what? It's going to go like this. When you see walking sideways like that, that's a trap. There is no momentum. Yeah, you're going to see momentum in a 1 hour, but technically there is no that much momentum right there. Now, how you can see it? Let's play the idea that the dollar bottom and this a nest and it's bullish, all right? Then you're going to get, I don't see divergence here, so it's hard for me to tell him, but well, let's say you have, right here, you have 3 and A, and then you have a flat in the middle and C. And then this is A, B, and he's going to trade lower in 5 ways, either from here or a bit lower, higher, I'm sorry. That's the only bullish scenarios that you can get, in my view. Outside, that can be in the big weekly triangle and then do not need to go higher as an impulse. And then this is, you know, you guys know what I mean, right? This is W, and then this is A, or this is S, and then this is A, this is A or Y. It's gonna do 3 backs and going higher. That's another thing. But the famous crash from here, I don't see it happening. I need to see it to believe it. Maybe I'm wrong. Maybe I'm wrong. So, technically speaking, I like to sell the dollar around current levels because I really do believe that the dollar is going to get weak probably for the rest of the week. And then see what happens. That's for the dollar. Oil, what else I can tell you in oil that I have not tell you already? Do not want to go down. Looking at the weekly chart, at the daily chart, this can be the count. A, B, and Z. This is W, and then A, B, and a flat that is going to go either to around 102 or even 106. 106 is if the S&P is in the triangle. Oil is going to end. Probably oil is going to keep going higher onto 106, something like that. That's the most bearish count. And that's the one that goes with the flat on the dollar, and that goes with a less bearish, with a bullish triangle, but in the 4-way in the S&P. That's what I see, oil. Now, let's move on to the individual pairs for a second. Let me switch a little bit. One second. $134.90 is very interesting on the euro now. For those that follow in the euro. Let's see. What happened? Sorry about that. The good thing is that the euro didn't break the 57 high. Okay, let's open the euro in the 4 hour. Okay. This is what's going to happen with the euro. Simple, guys. Simple. Do not get complicated. In our principal count, the euro is in the B-way triangle. The debate is this W or this is the E-way? All right. What you got from the top in euro? Like a dollar. A questionable 5. A questionable 5 ways. If it's a 5 ways, then this is 2 ways. It goes 1, the same, A, B, and C with a flap in the middle. That's the bearish count. And then the E-way and the here, and then when the S&P gets, let's say, to 1300 trusting for the triangle, the euro is going to recover to 139, 140, and then from there. So my advice, don't worry about it now, because do not make sense worry about it. I believe that either from here or a little lower, the euro is going to recover. Now, why the euro stop here, same as a dollar? You have to the 618 of that count when this is the case that it did WSY, and that's the bullish one. Now, if it's a flat and there is the bearish count, you have to invest right here, I believe, and it's reversed to around the 1.618% of a way. That's typical of a flat also. Not only that, these two legs, they are equal right there to the pit at 32, and that's why it reversed right there. Now, everything getting back to the beginning depends of if this is a 5 or this is a 3. Looking at the cap is a 3. So let's put the RSI. This is why I'm labeling as this possibility. There is a flat in the middle. In a flat, it goes like this. The C way of the flat in the RSI is going to pass the peak of the A way even when the price didn't, because it's the higher momentum. The higher momentum in a flat, the C way is the biggest momentum. Right? So taking that into consideration, you see A, B, and C. I know that some people are going to question that if this is a 5-way. I'll be honest with you, I was waiting on 38.64. I got sad screaming on me that that's how they create the top on Sunday night. Remember, Zach? And the intra-wave was calling for another high minimum. That's why we were waiting on 139. Unfortunately, they drop it. Now, if this is A or W, S, and Y, I can count right here 4 swings of 5 ways each. Right there. And then if that's a 3-way, the euro is going to go about 144. Now, all depends on the S&P. I can explain to you guys everything, but all depends on the S&P. What I see next for the euro, higher prices. Now, getting back to the question about the small time frame, as it is right now, you can label this as 1, 2, 1, 2, 3, 4, 5, 4, 5. This is 1. Then A, B, Z. That's 2 to the 76.4 of, that's our entry. Our entry is right here, 134.60. Now, why do I want the high to hold? Because if the high hold sag, what happens is that from here, I can see 1, 2, 3, 4, 5 swing. Now, with the flat in the middle, technically you have A, B, Z. You follow me? With the flat in the middle. Now it's very easy. All you have to do is, your risk is well defined, is here. Your secondary risk is right here. And maybe this is an ABC. But again, I was telling the guys today that the euro can be in the wave 4. Remember Isa? It's kind of big already. But look, this is on the 15-minute chart. Yeah, there is no divergence here. And then if you look at the S&P, the S&P needs lower before going higher in the seaway of E. That makes the sense for being the wave 4. Now, getting very deep on it, you have 1, 2, 3, 4, 5. You can count. Let me make the count for you guys so you guys see it. Forget about the degrees. It's just so you guys know what I'm trying to say. We catch some peaks. You never know. You have to let it run in some degrees. This is how the count see. And in regular 2. And then right here you have 1. And you have 1, 2, 3, 4, 5, 2. Then you have the 3. You have the 4. And then you have the 5 that ended here, wave 3 of 3. Then this is going to become right there. And then right here goes the 4. Let me see. And then you have 1, 2, 3, 4, 5. Let me see. It's round. It's right here. This one goes right here. I'm making it out because it's on the side. Right here you have another one. And the way that I draw this conclusion is because of cable. And then right here you got the 3. Let me follow now. Now we got it. You got the 3 here. Right here you have the 4. And then right here you got 1, 2, 3, 4. You have right here the 3, the 4 with an irregular here. When you have 1, 2, 3, 4, 5. The subdivision of this one, let me put it to you here. It's like this. And then the send right here, you have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And then right here, let me erase everything that is outside. One second. This is no guarantee. This is the count that allow, there is no divergence on the low, so it's a 3-way move from the top. And then right there, you have the ABC completed right there. That's going to complete the 4. I think that we present that count in the morning. And then you're going to see how, look, the fee was tension at the 4.236 right there, and that way right there. 23 now. Now look at this one. At the 4.236 right there. You see it? The low. No. I think it comes from here. I think it's the 6.818. Let me see how it is. Yeah, around the 1618. Now, that's a possibility. And then right here, you get to the 23.6. That's a possibility. Do not mean that that's the case. What I mean is this, that from here to here is 3 ways. We are long from here if. We are long from there if it doesn't make a new low, good. Otherwise, in the next low, after 5, you're going to do the same thing that you did this morning. Fade it or buy after 5 swing. But this can be an ABC. A flat B, 1, 2, 3, 4, 5. That can be the case. You see the count now, Zach? And then that's going to take the euro. If that's the case, that's new low can drop the euro lower, and then that can go with the idea that is a flat B, and the C. And then it can take it as lower. You got to understand the 5 already. I would say I don't think going to the equal legs, knowing from there. I don't see it going into the equal legs from there. But I can see it very easy testing 133 and change. You know what I mean? Very easy. And then that count also goes pretty well with this. Now, if the low happened after the next low, you need to buy like you did today. And this time, we ain't going to stop, guys. Remember when we stopped around 131 and we ended losing the whole move? We won't do it this time. This is what put the red flag to me this morning. This is cable. And guess what? You got 1, 2, 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4, 5. Look, extension at the lows, 618, 6.618. Right here, you're going to see a well defined to the 3.236 right there, a 4 and a 5. 23.6. We passed the 618. Look how it bounced here because of 618. But it did create a low at the 618 of the higher or lesser degree right there. So this is cable. From here, it went back. Haven't reached the 23.6 yet, but from the lows, I knew this morning that cable, it would do another low. Now what it matters to you in cable, forget about the whole structure. What it matters in cable is from here. And it looks like that from there, it looks like from here, you can label as an expanded triangle. 1, 2, 3, 4. No, because that's bullish. It looks like, I mean, it's very hard because I see this drop in 3. I see this recovery in 5, so maybe is A. What is the low? Okay, the low is here. Maybe it's 3, 3, and 5 when you have this decline is in 3 to enter into the low, the decline is in 3. That's telling you that the flag can be in place. So maybe it's a flat, but also in a 1 minute chart, the decline into the last low, let me see. It looks also like, well, it can be a 5. Cable can be half a bottom already. But I knew that this low is going to happen this morning. Look. I knew that cable is going to make a low. Now, only a flag can make the case for the bullish case when you have 1, 2, but I see this also as a 3-way. When you have 1, 2, 1, 2, I know that you can make the case from these 3, 4, 3, 4, and 5, but it did make another high. Only a flat can make the case here for the bullish cable holding the low. Otherwise, it have to be one of those cable structures between you and me, guys. But well, cable, if the low is here, you can have A, B, C, D. Yeah, it can be an expanded triangle what am I thinking? The low is here. A, B, C, D, E. It can be an expanded triangle there. Cable does expanded triangle. That's what I like. You like that one, Isa? An expanded triangle and cable on the way forward right there? Everything is three ways. Yeah, it looks like. Okay, guys. So in the cat, as a pair, needs to see it like this. And that's why maybe one more high. Look at this side. Can make the case. You have A, B, C, right? Clear, three-way. And then let me adjust the count. You got W, S, and then you have A, B, C, W, S, A, B, C, Y. That's a double zigzag, right, to the equal legs, like we've been labeling. And then you have right here to the 76.4 of these three, and then maybe what you have last night. Maybe you have A, B, C, or you have maybe this W goes right here, and then now this looks like a 5. So I would tend to label it like this. W, I would tend to label it like this. You need three ways from here, either in a double zigzag or in an ABC. The number is bouncing from the 50 in three-way or nesting. Let me be clear about it. But I still believe that goes pretty well also with another high on the dollar right there. And then that's going to complete the structure when the dollar cat can get some legs tonight and going to 103.80. It's a long way. But well, maybe it doesn't going to end from there. It's going to end from here. But it's going to make a new high. Maybe it's going to test 103. And from there, it should drop. That's what I have, guys. I believe that the dollar have a new high on it, or the dollar is down. Before I ask you questions, let me show you Aussie. Aussie didn't break the low that happened on November the 10th. It didn't, which is it have to. It have to. It didn't break the low, but it have to. And I believe that Aussie is looking for 99.06, maybe, looking here before a bounce. In a count like those, W, S, Y, A, B, W, S, Y. You have 1, 2, 3, S, 1, 2, 3. You have 1, 2, 3, and then right here you have B and going lower. Going to the 60-minute chart in Aussie, from here, you can make the case of A, B, C, D, E, like a type of contracting triangle there. Let me see very small in Aussie. Same case on the euro. This is a complete three, maybe a complete three ways. You have 1, 2, 3, 4, 5, 1, 2, 3, 4. It did 5 ways from the lows. Like I say, either the dollar is done or one more high. But it did 5 right here, coming out of 5. Very interesting. But from here, you can say A, B, C, D, E, like in a triangle there. But what is important is that Aussie do not break. Also do not break this low. Was the only pair that respect the low. So that means that it has to break it. Because this is a three-way move, most likely. So that's everything, guys. Any question that you guys have? What the conclusion is that we are expecting either a new high in the dollar or the dollar is done. And then after, we need to wait and see what the market is made of. Any question? Think that we cover everything. Euro pound. 1 second. That's a mess. Complete mess. It can be done here in 3 ways. Or a flat, lower. That's a complete mess. The recovery from the lows is corrective. Unless you count it like an A or 1 and a flat B and it's nesting to the upside. I won't touch that pair now. It's right here. It's close to the 618, which makes me scared. But this is not a 5. This is a 3. Can be a 5 if you call into here 1, something like that. Very amazing. I mean, it's being sideways, but I would believe that at some point it's gonna trade higher, in my opinion. Any other pair, guys? Any other question? All right, my friend, you're welcome. Okay, guys, so let's leave it there. I'll get back to you guys later.